There's no surprise that ICT loves talking trash about candlestick patterns, but is there a possibility that he's wrong? In this video, I'm going to break down why some of these basic candlestick patterns have a use in the marketplace. We'll cover outside bars and pin bars, and I'll show you exactly why you should be paying closer attention to these basic candlesticks. I guarantee by the end of this video, you'll never look at price action the same. All right, so we're going to talk about just some basic price action, and these are things that I picked up a very long time ago. If you guys want to take a look and actually find out where I learned from, you guys can search for James 16 at Forex Factory. And surprisingly, I did not know this, but Trader Dante was actually, Tom Dante was a student of his as well. And we both actually kind of came up in that same mentorship. And James 16 did have a private group, which eventually shut down. Unfortunately, I was only a part of it for a year and a half or so. So that was like my first foray into trading education. And what I didn't realize was that it's not that these price action candles don't work, it's that you need more context around them, which I believe ICT does provide. And I've been using them in conjunction with ICT for a very long time. Now, we're just going to cover two of the most basic, easily recognizable candlestick patterns that I've used for quite some time. And I want to clear up some things because I have seen some people mention that these are engulfing bars when they're actually not. So I'm going to talk about an outside bar and then a pin bar and why they're actually important, right? Not for the fact that ICT loves to trash on candlestick patterns, but if we dive deeper into them, we can actually understand what's going on behind each one of these candles on a lower time frame. All right, so the first candle we're going to talk about is the outside bar, and in this case, it's going to be the bearish outside bar. So this candle is comprised of two candles, all right? The second candle should raid the high and the low of the previous candle. That's what's, to me, engulfing. Now, I see some people mentioning that sometimes these are engulfing candles, like they'll have a wick that's lower. That's not engulfing to me. It needs to take out the high. So when we take out the high, that is creating the engulfing candle because it's taking out the high and the low. So it's a double liquidity purge. All right, so from the outside, this is a normal price action pattern and represents bearish tendencies, but we need to look more closely at the inside of the candle. All right, so BEOBs, or as James 16 used to refer to them as, are most probable when they appear at swing highs. If they appear at swing lows, oftentimes they can signal exhaustion. Now, when we dive into the lower time frame, you'll know exactly why I find these candles so important. So, just referencing these two candles, we're going to reference this over here. And what this represents, what this two candlestick pattern represents, is our lower time frame market maker sell model. So initially we have a candlestick that creates some type of range, all right? And it doesn't really matter where this candle closes, but the next candle, what it does is it takes out the previous candle's high, and then it breaks structure and then takes out the previous candle's low. So inside of these two candles, we're going to have buy side delivery and then sell side delivery. So we only need two candles to represent this. And this is why it's so powerful, because going forward, we have a clear indication that this market structure is changing in a live environment or in a real-time environment. So when we have this indication here, and then we get a sweep above the high and then a break below the low, all right, we're creating a higher high, but then at the same time, we're creating a lower low. So inside of that lower time frame, we will see, a initial consolidation or a run higher or a buy side of the curve. And then at some point, that next candle is going to create a sell side of the curve, and we're going to start attacking those different PD arrays on the buy side, all right? And vice versa for our bullish outside bar, all right? So just like the bearish outside bar, this candlestick is comprised of two candles. The second candle should raid the low and the high of the previous candle. Now, why is this important? From the outside, right, it just represents bullish tendencies, but we need to look more closely inside of the candle. Bullish outside bars are most probable when they appear at swing lows. If they appear at swing highs, oftentimes they can signal exhaustion. And I will go through some chart examples right after I'm done with this explanation, but this is a very basic explanation. These are very easy to spot on the charts, and you guys should be able to go in, study these, and going forward, you should be able to backtest and see how these markets operate, right? Because oftentimes, and Omar has actually mentioned these bullish engulfing candles or bearish engulfing candles, oftentimes they'll retrace to a quadrant of this candle. So it might retrace to 50% or 25% of this range. So we have our lower time frame market maker buy model. Okay, so we've taken out the previous low, and then we're changing delivery and then attacking the buy side of the curve. All right, so we have the sell side of the curve creating this candlestick, and then when we flip, we take out the low. There's our liquidity purge. We might have a breaker in here, right? Unicorn model, 2022 mentorship, whatever you want to call it. And then we're going to start attacking, the sell side of the curve as we go higher. The next candlestick we'll talk about is the bearish pin bar. All right. The closure of the candle should be bearish and should appear in the lower third of the candle and create a long tail or a wick. Now, if we get a pin bar that closes bullish, I don't really look at those as smart money reversals, which is what we'll talk about just in a second. But I'm looking for a bearish close at a swing high, maybe taking out a previous level of liquidity. Let's say if we had a previous level of liquidity, we took out the swing high, and then we get a closure back below. I will look at this as a pin bar. We might get a retrace up into 25, 50% of this candle, but we should be able to use this high as our possible stop loss placement. Now, why is this important? Although from the outside, right, it represents bearish tendencies, but we need to look closely at the inside of the candle. So bearish pin bars appearing at swing highs signal smart money reversals after sweeping liquidity. These candles will often create lower time frame bearish breakers. And what I mean by that, right, we're going to have some level of market structure shift because this is what creates the pin bar. So if we think about how this candlestick actually forms, right, and we plot it out on a chart, this is exactly where you're going to get. You're going to get some opening price, a high, right, a low, and then a closure, and then the closure will be below the open. All right, so this will create our open, right, and then it's running higher, low, and then closure. So this one candlestick, this one simple candlestick should show you a breaker tendency on the lower time frame. All right, and then vice versa for bullish pin bars or hammers, right? The bullish pin bars, they need to close in the upper third of the candle. So if we were to split this candle in thirds, this candle needs to close in the upper third. Or sorry, let me, if I did it like this, right? It needs to close in the upper third of the candle. It shouldn't close in the middle. It shouldn't close down here. It needs to close in the upper third and create a long wick. All right, so bullish pin bars appearing at swing lows signal smart money reversals after sweeping liquidity. These candles will often create lower time frame bullish breakers. All right, so this candlestick on the lower time frame, you guys will see some type of market structure where we're taking out a previous low and then we are closing higher. This is creating the long wick down here. I would say this wick is probably longer than that, obviously. And you might get a bullish breaker somewhere in here. So now that we have our understanding of bearish engulfing bars and bullish engulfing bars, let's just run through some examples, right? I think the best way for you guys to learn is actually to see examples of this actually panning out real time. So right here, we have a bullish outside bar or bullish engulfing bar, right, at a swing low. This is our indication that we are entering a market maker buy model because we're taking out liquidity. So we've taken out the previous candle's liquidity, right? And then if we were to drop down on a lower time frame, this is going to create that run higher to start attacking some of the sell side liquidity. Here is another bullish engulfing candle. This is our first indication that there might be a market maker buy model, and then we'll attack buy side liquidity, right? So what do we get on that following candle? After we get the engulfing candle, that next candle will just retrace back to some specific level. So this rebalance to this old candle's high. We got a retrace lower, creating this lower wick, and then ran higher. All right, this is a bullish engulfing candle at a swing high. And like I mentioned, they can signal exhaustion candles. This is what we need to really be mindful of, is when these form at the swing high, right? This one formed at a swing low. This one formed at a swing low. This one is forming at a swing high after we've already taken out liquidity. That is my first indication that the market is starting to be exhausted above some of these old highs. All right, same thing here. This one actually is not an engulfing candle, but if I blended these two candles together, which I will discuss in a different video on blended candles, but that's a whole different topic. Now, let's find, these don't always necessarily work. This one failed, right? But we will just keep running through our charts and finding examples of bearish and bullish engulfing candles. This one failed as well. This one's a bearish engulfing candle. You guys can see it's not quite yet at a swing high. If this had formed up here after we took a swing high, that would make more sense, right? So the context behind using them is very, very important. Let's see if we got any more candles in here. So we have another bullish engulfing candle here, right? After taking out liquidity, this is our indication that we are starting a market maker buy model. And if we were to drop down on a lower time frame, we can obviously see that you know, this is the beginning indications of a market maker buy model. So we've taken out the low. We're going to start targeting some liquidity above the marketplace. And when I find a really good example, I will dive into the charts. You know, why don't we just dive into the charts here? This is August 19th. So here's August 19th. And if we even, I would say we would probably have to even go down a time frame because there wasn't enough information on the 5 minute. All right, so here we have this run on liquidity. This one right here is creating our bullish engulfing candle. So this created our bullish engulfing candle. Okay, so you guys can see that, yeah, we had this initial consolidation. So here's our initial consolidation, right? This ran out our liquidity. We got a run higher, so this is an expansion. Inside of here, we're gonna have some reaccumulation, right? So this is a 1 minute time frame, but this is reaccumulation. Here's more reaccumulation after another expansion, and then we ran higher. So here's an initial reaccumulation. All right, this is our smart money reversal down here after we've taken out liquidity, which creates the bullish engulfing candle. And then we're starting to create signatures of a market maker buy model, right? As we go higher, we have another expansion here, some accumulation here, etc., etc. So let's go back, let's keep going through and find more examples of these bullish engulfing candles at swing lows or bearish engulfing candles, right? So we have another bullish engulfing candle here. Actually, this is low. No, this low is not lower than the previous. So for me to classify something as a bullish engulfing candle, it needs to take out the previous low. If it doesn't, to me, that's not a bullish engulfing candle. This one's a bullish engulfing candle right here, but the bodies of the candle are, it is small, but you guys can see that, you know, once we create that candle, we just get a retracement, we leave the low intact, and then we continue higher. So many times those candles' lows and highs will be respected as we push higher. Let's see if we'll find some bearish engulfing candles. Here's a bearish engulfing candle here on July 30th, taking out a swing high. This is our indication that we are entering a market maker sell model. You know, the next candle we get retraces towards the previous candle's low, and we will start attacking some of the buy side of this curve. All right. So there's another example. Here's another example here, as well as here. So if you missed this one, there's one right here. But you guys can see that after we create this bearish engulfing candle, on this lower time frame, this right here is just a retracement. All right, so this is just a retracement inside that market maker sell model, and then we're going to start targeting this low down here. So if you missed this initial entry, that doesn't necessarily mean that the market is done selling off, because we are just retracing and providing another bearish engulfing candle here, which creates another opportunity as a market maker sell model. So inside of these couple hours, right, there are indications that a market maker sell model is appearing on the lower time frame. Let's find some more examples. Here we have another bearish engulfing candle. Both of these actually are bearish engulfing candles. So you guys can see the following candles are very highly likely to move in that direction, because on the lower time frame, it is creating a market maker sell model. Here's another example, right? Bearish engulfing candle. This candle is just a retracement, trading higher, and then we're going to attack the sell side of the curve. Here's another bearish engulfing candle. You guys can see that they don't work all the time, but when you can spot them and when the context of the market is correct, they will continue trading lower. You know, here's a bullish engulfing candle, but we're only getting a very quick run above this buy side liquidity. So yes, this is a market maker buy model on a lower time frame, and this one candle, let's say this candle right here, if we didn't get to this high right here, this candle alone could have provided you profits on a short-term time frame, right? Because it's running back into buy side liquidity and then running up to sell side, and that's where terminus is. So here's another bearish engulfing candle, right? Any retracement in here will eventually target sell side liquidity. I think that's enough examples of bearish engulfing candles. You guys can run through and obviously find numerous examples of these working. Here's a bullish engulfing candle, right? This will create a market maker buy model. We have fair value gaps being filled in after the fact, and then we're running higher to target what? The sell side of the curve. This one is a bearish engulfing candle at a swing low, right? And this is where context is so important. I would try and sell these as they appeared, but context is so important. If it's appearing at a swing low, I'm more inclined to leave those alone. This one, however, is more at a swing high, and there's plenty of room to run lower, so we get a small retracement on this candle, then it'll create the market maker sell model pushing lower. Here's another example, a very, very small bearish engulfing candle right here. You guys can see how it's taking out both sides of the market, and then those following candles provide massive selling pressure to take out all of this liquidity down here. So you start attacking all this buy side liquidity. Here's another bearish engulfing candle. I can go through a plethora of examples of this constantly working out. And it's just, you have to be patient waiting for them to appear, because they don't appear all the time. But when they do appear, it's like, gangbusters. Here's a bearish engulfing candle. Yes, it's very choppy, but it eventually trades lower. This is a bearish engulfing candle right here. Here's a bullish engulfing candle. You guys can see that these are, on the lower time frame, they do start market maker buy models. Here's a bullish engulfing candle here. Because what it's indicating is that it's a purge on liquidity, and then they're quickly changing the direction of the market. So, because why would it double purge? Why would it take out sell side liquidity and then buy side liquidity and close bullish? Right? There's only one indication, is because it's ready to run higher or lower. Let's see if I can find any more bearish engulfing candles. Here we have a very small one, but it is enough as a short-term run to run lower to fill in some of this inefficiency. So on a short-term time frame, right, these are market maker sell models. It's just, where is the terminus? The terminus is just 50% of this inefficiency. Here's a bullish engulfing candle right here. You guys can see that we took out the liquidity down here, ran higher, and then it continued higher here. Bullish engulfing candle here. So you guys can see these are very short-term plays. They're just looking for a change in the delivery, where those buyers are, we are going into a market maker buy or sell model. Here's a massive bullish engulfing candle. Obviously, we had to retrace back into fill in this fair value gap, and then we'll trade higher. But so these are, just examples of bullish engulfing candles creating the lower time frame market maker buy models. So when they appear on the time frame on your charts, it can be very clear for you to trade in one specific direction. Yes, they don't work all the time, as nothing really does. Here's a bearish engulfing candle, right? So after we've taken out liquidity, we're just trading lower, taking out all this sell side liquidity. So once we take out that buy side liquidity, order flow is changing. We have this fair value gap that's appearing, and a lot of times these engulfing candles can create fair value gaps. All right, so hammers, right? And as I was going through this, you probably saw tons of hammers being created, or pin bars, right? Here's another bearish engulfing candle. These pin bars, right? This pin bar, if it's taking out a swing low, this is my indication that is a smart money reversal, right? That is a very, very clear indication that it's a smart money reversal. If we get a strong close, it needs to close bearish or bullish, one specific direction. I'm going to try and find a really good bearish pin bar. Here's another example. Even though it is choppy, if we take out that sell side liquidity, there is opportunity to go long in here. This is a very clear indication of a smart money reversal. You guys can see that this hammer, pin bar, as it forms at a swing low, and we get a closure back above a previous low or high, if the context is right, we're going to get that run higher. I'm going to try and find a really clear pin bar that's bearish. This one is really good. This is our smart money reversal trading lower. So we get a nice long wick. This closure is in the bottom third of this candle. And then you guys can see that here's our smart money reversal. We have a massive sell-off as soon as we raid that buy-side liquidity, put in that long wick, get a closure here. This candle will just retrace to 50% or so of that prior candle, and that's a clear sell-off. I would possibly call this a hammer, although the body of the candle isn't great. It ran out this low down here. You could even say that this candle right here was the smart money reversal, but this must have been news on this candle right here. You guys can see that it was at 8 a.m., There probably was some 8:30 news release that pumped it lower, and then we got that run higher. I typically like to see these hammers be closing in the direction that I'm trying to go, but depending on the context, right? This hammer or pin bar shows up after taking out buy side liquidity. We are in a bearish environment, right? So this order block level will provide bullish, bearish price action. Now I'm going to bring up a trade that I took that was a very, very clear indication that this was a pin bar that was going to stay in place and be a really great swing trade. So at the time of this daily chart, taking out this swing low, and then we got this massive, massive pin bar here. All right, even though it didn't close bullish, you guys can see that that was the start of a smart money reversal. So if you get that massive pin bar on the daily time frame, it's going to indicate, you know, this is kind of where the market's starting to get exhausted, and then we're going to start trading in the direction, you know, opposing to which direction the wick is formed. Another example here. Well, yes, this candlestick did not provide a bullish close. It still closed in the upper third of this specific candle, and then you guys can see the reaction we had away from it. So yes, there was a deep retracement here, but after we purged that liquidity down here, this is just a retracement. Here's a pin bar here. This one. So this candle. Right? Long wick. Nice close. Traded lower. Right, here's another engulfing candle. I could go through these charts for days and days and just spot these candlesticks, and you guys will see that they actually do work if you have the right context. So we have this bullish engulfing candle here, just a retracement. This is the start of our market make a buy model, right? And we trade higher. Here's another a bullish engulfing candle. So we have two signs of bullish engulfing candles. This one as well as this one. Here's a bearish engulfing candle. And you guys will find this work in any market that you're looking at. Right? Bearish engulfing candle here, bearish engulfing candle here. Right? And these are all indications where on that lower time frame, they're taking out buy side liquidity first and then running price lower. Or taking out sell side liquidity and then running price higher. Right? That's really all we're looking for as far as a lower time frame indication. Same thing here. We have even after we've got this massive move lower, you have this bearish engulfing candle here, and that is another leg of a market maker sell model. So I hope you enjoyed this video and you learned something new. If you're the type of person that needs more one-on-one direct mentorship, make sure you book a call using the link in the description. Inside the mentorship, you're going to get a ton of recorded content, access to me directly, live streams each and every week, weekly analysis, psychology sessions, and more. I've helped students like Dom and Mike turn their trading around, and now they've gotten their first payouts. But if that's not you, just go ahead and leave a comment, like, subscribe to the channel, and I'll see you guys in the next one.